How's it going, guys? Let me discuss with you guys how to do a poor man's cover call on a stock that I see setting up that I would love to do it on. And the stock that I'm going to talk about is Tesla. And you don't have to have 100 shares of Tesla. Obviously, Tesla is very expensive. So owning 100 shares, you would take 284, or let's just say 285 times 100, and that will cost you, my bad, 285 times 100, and that will cost you $28,000 and 28,500. We can do this at a different we can do this a different way and do a poor man's cover call. We know winning in three directions is always the best strategy. I love teaching that strategy. It's the absolute best. So I'm going to teach you guys, if you don't have enough money to buy 100 shares of Tesla, do this instead. And we're coming into a very big area of resistance rate in here. So Tesla could kind of reject a little. But we know the monthly chart is saying that Tesla is in a big uptrend. We hit this EMA 50 and we have been bouncing from that area. From this EMA 50 up, we've already made a 28% return. So here's what I want you guys to do. Go to your option chain, and I want you guys to go do a call, single option calls, and we're going to do a leap year. All right. So if you guys haven't learned about this, I'll show you guys, or if you've learned about it and you just had never tried it, this is how I would do Tesla for a cover or for a leap year. I would go all the way out to 20 March of 26, 327 days out. You could do a leap. You could actually do 6 months out. It depends on your what you want to do. But I would do something kind of towards in the money. So if Tesla is trading at 285, I would probably do something like maybe 281 and just kind of see how much that would cost me. So if I look at one contract, um, right here at the 71.85, that will cost me roughly $7,185. You can see on the graph here, then how much it's costing me. Okay, so $7,185. Okay, or you can do a little farther in the money, right? Since you have a leap, you can design this however you want it to do. Let's say you want to do this one. Well, let's say you do this strike right here. It's only costing you 4,000, and that's not a bad idea. So we can go a little far out of the money, depending on what you want to do. We can do a 380 strike. Obviously, that's this is a year out. So I mean, Tesla can easily get up to 380. But me personally, I'd probably do the 280. Just do one in the money, make it a little safer. Not as less time decay or theta beating it up since we're in the money. And I would do one call here, cost me $7,000 compared to the original that cost me what? $20,500. Remember, Tesla is sitting at 285, so 285 times 100. It originally would cost you almost $29,000, and you're getting this for a fraction of the cost for only 7,000. And you can adjust this however you want. If you think that's too expensive, well, you can do 6 months out. Let's say you want to do 19 September. That's about 145 days out, 30, 60, 90, 120. Pretty close to that 6 month mark. And you can see, like, okay, let's say you want to do one in the money here. Well, you can see right here, one in the money will cost you about the same $4,900, right? About that 6 month mark that I wanted, or 1 year out I wanted. So that's how you do a poor man's covered call. You would buy a call option way far out expiration. I recommend a year out. And then here's the beautiful thing. You can pay that leap year option for free by now selling covered calls. And I would suggest you do this weekly. So you can look at every right here, 2nd May. This is the one that expires the most recent. And what I would recommend doing, since we know that Tesla could kind of retest or like kind of go down a little, but if it does decide to just pump up, that's the best case scenario because then our call option goes up dramatically. And I'll show you what to do with your covered call, because if you have a covered call option, obviously the premium is going to go up as a seller, because if Tesla moves up, then your premium goes up. So I'll tell you what to do here, but I would look into something that wouldn't execute, right? So if we're looking at Tesla's chart right now, and we see that there's major resistance here at 290. Okay, so we can go into Tesla and be like, we need everything above 290. Just to give a little bit more wiggle room, we can probably go for $300 or 300 strike, right? So if we look at the 300 strike, you kind of see where that is. Well, that's just slightly above this. We have this resistance here. So maybe we can look at 303 maybe. So we could do probably 305 to be very safe. So if we do 305, and remember, one call option controls 100 shares, okay? So we can do only one covered call. So we do one leap year option that costs us around the $4,000 to $7,000, depending on if you want to do in the money or out of the money. I recommend in the money. The leap year was like $7,000 that I would do. So, and then what we can do is we can do one covered call right here on the mid, and this is awesome, guys. You're collecting $410 every week. So if Tesla does not go to 305, which is the strike we're selling, by 2nd May, we collect that $410. So if we keep collecting $410 every week, and let's just say, we keep collecting it, times that by, 4 weeks, you already collected $1,600 of premium income. That is massive, and you can keep doing this and doing this. Now, obviously, we want Tesla to, go up, but we want it to just go slightly above, below our strike here. So you might ask, well, what happens if we start to see our strike go in the money for our covered call? That means we're starting to lose money on our covered call, but then again, we have our hedge of our call option, our leap year call option, making money. So it's not a big deal. What you can do is you can roll this contract. That might sound confusing, but it's not. In your broker, once you're in a covered call, you have the option to roll it. And basically what that means is you're going to buy the covered call for a loss. Because obviously, if your covered call is in the money, it's going to be a loss for you. But you turn around and you sell a new cover call 2 weeks out to collect that premium, and then you recover your loss from that. Okay, so you collect that premium 2 weeks out, collect that. Now let's say we sold a cover call right here for 410. 2 weeks out, you sell a cover call for like $10 now. So now you see how you collected $6 of extra premium. So now you're actually winning again. And then if it keeps hitting it, you just keep rolling it. Okay, that's the purpose of rolling options, where you have your long call option. So if Tesla keeps going up, you're making money there. So that balances out your cover call. But let's just say Tesla goes down, at least you can make money on your cover call. Okay. So that's the purpose of that, guys. I hope you guys understand this. I love this. If you guys want to learn more about this, I would love to talk to you guys. I have live streams every day. You can find me in the Discord if you want to learn more about how to do a poor man's cover call, where you don't have to have 100 shares, which would cost you about $21,000 for Tesla. You can do the cover call, right off the bat, or the leap year option, which could either cost you 4,000 or 7,000, however you want to do it. 4,000 is not a bad idea, and then you're collecting that $400 to $500 every week just from that four grand if you really wanted to, instead of using 21 grand. So I hope that makes sense, guys. If you guys want to join the Discord, make sure you click the link down below in YouTube comments below, and in the description it'll say join the premium Discord for my alerts and system. It'll take you to this free chat landing page. If you want to learn more about these unique strategies, advanced strategies that will make you consistently profitable, hit how to subscribe and hit day trade alerts. When you hit that, you get access to everything. It is $12 a month. It's not going to cost you guys a lot. A lot of people tell me how grateful they are that they learn these kind of strategies, because they think that, you can only win Tesla either by shorting it or going long, and you only win in one direction. Whereas this strategy, you win in 3 directions. You win if price goes up, down, and sideways for Tesla. Tesla could just do something like this, where it just goes sideways. Well, your cover call is making you money. What if Tesla just skyrockets it to the moon? Well, now your leap year call option is making money, and then you just keep rolling your cover calls until it kind of settles down, and then you keep making that passive income. That's the idea of a poor man's cover call. All right, so if you guys want to learn more about these tactics and want to learn my best strategy, which is my credit spread, I make money every day doing that. Click the day trade alerts. It's only going to cost you guys $12 a month, and you get access to all my services. If you subscribe on the computer, you'll avoid the iOS fee. And that's the best way to do it. If you have an Android, you will have to use your computer. But I hope you guys found this knowledgeable. I know this is a little confusing at first. You're gonna have to honestly try this on your own, or like get some experience. Once you do that, it's gonna make a whole lot of sense. But I hope you guys like this video, and I'll let you guys know when I see some opportunities. But Tesla makes the most sense to do a poor man's cover call, as I love this chart that I see right now. All right, guys. See you in the next video. Peace out.